Hey, what's up, stock compounders? Brad here. So I warned you guys that I was going to get into the podcasting game, and I've gone and done it. About a week and a half ago, I had the great pleasure of spending an hour with Divya Narendra, CEO and co founder of SumZero, a guy who was there at the beginning of Facebook. We cover a lot of different topics. I really tried to go down rabbit holes in this interview with Divya that aren't already in the public domain. So, without further ado, please enjoy this conversation with Divya Narendra. All right, Divya, how you doing today? Welcome to the show. Good to see you.
Thanks, Brad. I'm looking forward to it.
All right, awesome. So, uh, you did a talk, it was a live stream with Mohnish Pabrai a few months ago, kind of covering Meta, Facebook, a lot of what you're currently seeing with the business. There's a lot of change, obviously. And just a couple days ago, I noticed New Money. You had a conversation with him about Facebook as well. So I highly recommend, if anybody's interested in Meta, check those things out. We're not going to get too much into kind of current business stuff with Facebook, but I have some questions going back. You were at the beginning of Facebook. It was called Connect You, back when you and the Winklevoss twins were starting that up. And so the first question I want to go to, your relationship with Mark Zuckerberg, probably didn't start out on great terms, right? You guys hired him as the last programmer to build out Connect You, and then he builds this kind of competing service, right? How were you able to kind of overlook that potential integrity red flag and remain a shareholder for so many years in Facebook?
That's a good question. I think if you're in like an entrepreneurial uh, career or you're in any sort of like competitive environment, like ultimately, I think you have to be practically minded.
Hmm.
And at the end of the day, I never had any dispute with the the website itself, right? I mean, in fact, it was like it was a service that I fundamentally believed in,
Hmm.
and I think the the trials and tribulations of having to formulate an idea, try and get it deployed, and then having to deal with this kind of competitive shock, um, through the form of Facebook launching, which was essentially the same service, though that was an emotional shock, and I think especially at that age, I mean, I was like 19 or 20 at the time, I forget exactly. Uh, despite the feeling of kind of shock, it was really like we knew, and I knew that um, uh, our only recourse was like the litigation aspect of things, which we kind of went through, and that took many years. I think that was a call it through and through, like I think from start to finish, that was probably 7 years of legal proceedings. Um, but ultimately, the resolution of that was becoming a shareholder. So, one interestingly, during our conversations with Facebook, um, there, there was obviously an exchange of value, which you can Google, and you can sort of see kind of what came out of that settlement. But um, we were very much of the belief that we wanted sort of equity exposure to Facebook.
Hmm.
Even back in 2008, when we first negotiated settlement with Mark. And so, and again, that goes back to just again believing in the fundamental purpose of the business, and I think seeing the opportunity for that business to scale, right?
Mhm.
And having a sense of how much it could scale. So back then, if you asked me that, would this company achieve 100 and 20 odd $billion of revenue with 3.5 billion users, I probably would have told you like, yeah, it's possible.
Hmm.
Maybe not super likely, but certainly possible. Um, I'd say it's fair to draw the conclusion that like we wouldn't have thought it would expand the way it did. And I certainly, wouldn't have expected that level of growth. But I knew there was a viral component to the business that wasn't really something that like the average investor fully grasped.
Right.
I think most people think linearly, especially when they try to extrapolate or make projections, be it on revenues, user growth, or any metric. Like people tend to think pretty linearly. And this business from day one was an organic growth story. And just to put an interesting data point out there for you, when I launched, or when Facebook launched, within I think 1 week, maybe it was 10 days, there was something like 8,000 people at Harvard University on the platform. So that wasn't Mark Zuckerberg walking door to door, handing out flyers, hey, join my website, or sending out emails. That was viral growth. That was friends inviting friends. And I think, again, like it's hard to wrap your head around that, but it doesn't take long for that 8,000 to become, 800 million or something that's, much larger in size. And so I was always bullish on the engagement that was possible with the business. And regarding the monetization of that, even then there was always this belief that like, hey, this is something that could be monetized, advertising being the most obvious way to do it. And it's been amazing to see kind of what's happened since then. It really is an incredible business in terms of how it's transformed over a fairly short time horizon. We're really talking 18 years. It's not that long in the grand scheme of things. And they've gone through so many different, almost like seismic shifts in what they're actually offering as a business. So anyhow.
Yeah, there's a few things I want to tease out there. I remember you have a degree in applied mathematics. Isn't that correct?
Correct.
So, most people, right, we think very linearly. That's kind of, I don't know, maybe it's a human condition, right? We just don't think in a compounding way. Did your degree in applied mathematics help you think differently, or was it something else?
No, I think this is just basic math, but yeah. I think having seen that initial campus, like that growth on campus in real time, really helped, I think me appreciate what was really going on here. I mean, I wouldn't have even expected that to happen. And I think that comes to like product market fit combined with very low like barrier to entry, meaning it's a free service, right? You don't have to do anything. You literally just have to go to a website, put in an email address. So very low barrier to entry in terms of sign up, onboarding, very high sense of like affinity when you're joining this online community, which was at that time rare. Like if you wanted an online community experience back in 2004, like you would have gone to where you also had a high degree of affinity. You would be, probably joining like an email group or just something that's like much more niche, not really intended for scale.
Right.
But here it was different because it's like, okay, there's this university environment that's I think very representative of any other university environment. Mm-hmm. How many university environments are there? There's like thousands of them all across the globe. And then you saturate each of these like microcosms. And once you saturate one, you go to the next one. Mm-hmm. It was like a very, I think, organic and yet explosive growth trajectory. And you could see it from like the early days. It wasn't, that's why I think Peter Thiel got excited.
Yeah.
Right. That's why those early VCs, like they're looking at this in 2004 or 2005, and they're seeing like, wow, engagement is exploding on the platform, and they're seeing kind of the early results of that. And they're like business geeks or whatever. They're in the business of monetization. So they know like, okay, there are a lot of levers we can pull. And when things get of a certain scale, they can turn on the spigots. And that's something that I think from day one was part of Facebook's DNA. And it's part of Meta's DNA across all of their apps. It's funny you mentioned Mohnish Pabrai because he talks a lot about corporate DNA.
Uh-huh.
In fact, I've had multiple conversations with him. He loves bringing up the DNA of a company, especially as it relates to Amazon.
Right.
And
Or
Amazon's
Tencent,
incredible.
yeah.
Yeah, and Amazon's an incredible business.
Mhm.
And Tencent is as well. The DNA of Meta, and I think it's important people understand this,
Mhm.
is to be extremely deliberate about growing engagement and really nurturing engagement in a way that results in a platform with over 1 billion users. And it's really only then that they start to, crank that monetization lever. And today, even with like WhatsApp and Messenger that individually have like 2 billion users, they still have not
Sure.
turned on that monetization engine. Like it's like they're still experimenting because they want to get it right, and they don't want it to come at the expense of engagement.
Right. So it sounds like that was the plan quite early on. Like we're going to let this thing grow organically until it reaches this massive size before we start kind of extracting some value for ourselves. Is that what you're saying?
Oh, 100%.
Yeah. That's very powerful
Well, it's
to have
very
that.
unusual. It's very unusual
Yeah.
because there are very few businesses that I think have that MO. Like
Yeah.
now, I like the Amazon example because that's an interesting one. Amazon, it's been around, obviously a while, and but for most of its existence, Amazon was losing a lot of money, and
Yeah.
I think they were maybe the first to like ingrain this idea within investors that, hey, monetization actually isn't that important. Let's not let the tail wag the dog. Like, let's focus on building an incredible experience for customers. And what did that mean for Amazon? Like that meant like rock bottom prices. That meant really fast delivery times, really great return experiences. The sort of stuff you're not used to with retail.
I tell you, still, when I order a package and I get it delivered that night, I'm kind of like, is this even necessary? Like, this is too much.
It's almost hard to believe.
It's
It's
incredible.
almost hard to believe. And they have spawned. But the other thing that they did that I think is interesting is that they kind of conditioned folks like maybe not so much Mohnish, but like a lot of the garpier kind of growth investors out there
Mhm.
to be incrementally more patient. Now, I say that against a macro backdrop today that's horrific, where it almost feels like there are no investors out there. Everyone's a
Right.
day trader, right? And everyone's just like forced selling stuff. But I would say overall, at least over the last 10-year bull run, that I noticed that there was a willingness to kind of just let companies marinate their models a little bit more, and
Mhm.
which I think was an incredible gift that Amazon almost gave to the broad investment community.
Hmm.
But I think what Facebook did, which is I think incredibly unusual, is that they were profitable from a very early stage in their life cycle. So when they went public in 2012, right? 2012,
Sounds right.
their 2011 filing showed GAAP earnings of $1 billion.
Wow.
Not not sales, like earnings,
Mhm.
right? And think about how unusual that is today.
Hmm. Yeah.
And obviously that number has grown exponentially since then. But just to show you kind of the core earnings power of the business, and also the degree of like financial discipline that they have, which they don't get any credit for, but it's there.
Yeah. One other thing I want to poke at with what you said earlier was obviously it was an emotional experience seeing, Zuckerberg kind of run with this competing website, right? But you mentioned you knew you still had to stay rational, right? You wanted to make a business decision around it, and I think there's a very valuable lesson in there for investors, right? How do you keep the emotions kind of separate from the decisions? You see everybody in the market, or a lot of participants in the market right now, fleeing because prices are crashing. Is that something that was just part of your DNA, or is it something you kind of learned from that experience?
Yeah, so I'm a very patient person,
Uh-huh.
and I tend to have like a fairly small number of concentrated bets where I have like high conviction.
Hmm.
And I think even if you're not the most like naturally long-term investor, like you should still know what you own and know it well. And
Hmm.
I don't think that's the case with the vast majority of individuals. And I actually don't think it's the case with most, I mean, even a lot of institutional managers, because they're like too diversified to know what they actually own.
Yeah.
Like if you own 50 stocks, like how could you possibly know what's going on at all those companies and have a great degree of conviction on it? It's just impossible. Like I think there's a finite amount of time that one has. And so you have to know your book really, really well. Um, I think for fundamental folks, I mean, that's understanding, um, uh, corporate strategy, understanding kind of the backgrounds of the management team, especially like, the key guys, obviously, understanding the competition, knowing what they have to offer really well. So that when TikTok happens, like you have some framework to understand how big of a threat that is,
Hmm.
right? Or when Apple changes their iOS rules, like it's thinking through like, okay, like what is this company's, like in this case Meta, what is Meta's ability to react to significant shifts in the competitive landscape? You have
Yeah.
to like think through that. And now in their case, they happen to have uh, there are many examples in their history, in their short history, where they've been forced to react to significant pressure, either coming from competition or governments. And you can see, like, well, what did they do? Like what was the reaction? Like, how quick was that reaction?
Hmm.
Um, what was the velocity at which they released product changes or updates to, you know, to deal with whatever's going on in the world? And I have to say, like, they are the velocity of product change at Facebook is quite high, um, much higher than your typical company. And I'll just go through a couple of examples. Transition to mobile in the year they went public. Um, that caused a lot of people to sell the shares. Stock fell from like IPO price of 38 down to 17 and change. That was a 50% drop
Hmm.
in like a 6-month period. And the primary reason why was skepticism around transition to mobile. That was the main. There was no like, there was no macro issue or anything. There was no TikTok back. It was just literally like, can they move from desktop to mobile? And people were like, well, that's going to be really hard. um, and then you saw a series of major acquisitions that they made that weren't even in response to any ostensible threat in the media, but were in response to trends they were seeing as they looked at their own data around like, where's engagement going, right? So, buying a company like Instagram with 12 employees and zero revenues for $1 billion, like, was a total head scratcher for like probably 95% of people out there.
What did the stock do on that day, I wonder?
I, I don't remember the
Yeah.
actual response that day. I mean, I feel like even then the market cap was big enough where the billion was a small enough percentage of
Sure.
Facebook's market. We maybe didn't move the stock that much, but the negativity around it
Yeah.
was certainly palpable.
Yeah.
And the same thing happened, on with the WhatsApp acquisition, which was much larger. But there were a lot of people who were like, wait a second, like, what are they? This company makes no money. And I've mentioned this on previous interviews that WhatsApp actually had some revenues which Facebook completely nixed because they didn't think it was a long-term business model that
Right.
they wanted to scale. Like, it wasn't a scalable model for them.
They
So we
wanted
got
to
rid of
remove some friction, right?
they removed that friction, made it even more free than it was.
Hmm.
And now that's 2 billion people and is literally part of, um, you know, communications plumbing around the world, has become a significant sort of commerce platform. They have this partnership with Reliance in India. where shop owners are communicating with their customers through WhatsApp.
Mm-hmm.
There's a lot of stuff that people in America, I think, don't understand about WhatsApp because it's just not as common a tool here. But around the world, it's for a lot of people, it's like kind of home base. And the biggest transformation yet is this one to it's not the short form video transformation, or to me that's like a product tweak. It's a variation on a theme, but the stuff they're doing with respect to hardware is, I think, a very, very significant change in the business, and one that I think no one would have predicted before they made that acquisition of Oculus in the mid 2014, 2015, whenever that was. But again, these are not like minor things, and I've kind of listed off like 4 things. The first, I would say, between Instagram and WhatsApp, I mean, those were 2 like home run grand slams. WhatsApp is a little bit of a sleeping giant, and there are analysts, by the way, who actually knock Facebook from a valuation standpoint, because in their heads they're thinking, okay, every 5 years or every 10 years, Facebook's going to blow $20 billion to protect their competitive moat, but that capital is not going to generate any ROI, and it's not going to create earnings, because they're not willing to give any credit to the idea that WhatsApp could become a real earnings driver over time.
Right.
I think that's a crazy viewpoint, but there are people who take that viewpoint. But I would say you could argue Instagram may be the greatest acquisition of all time. Like, what is that worth today? I don't know, but it's a big number. Like, I would put that at least $500 billion. Like, I would say Facebook's market cap today may not even be what Instagram is worth today.
Right.
And and then they have the rest of their family of apps and all of the hardware stuff.
I want to spend a moment on Mark Zuckerberg. So you've obviously had a lot of time to observe Zuck. What attributes does he have that you think have enabled the mega success of Facebook, and how much of a factor was luck?
Well, look, I'm not like I don't dwell on luck, because I just feel like it's a waste of time. And there's no way to, I mean, I don't know. You could go back to like, was it lucky that for him that we met? I don't know, maybe, but I don't know.
People use luck as an excuse.
I mean, I think, look, I would say like lightning doesn't strike in the bottle like multiple times because of luck. Right. So, and if you're an entrepreneur and you're proactive, like I think Mark, and I think anyone who's in the industry, anyone who's an entrepreneur, there's some innate drive to build stuff. And he clearly has that. I mean, I think people always ask the question, like, what is your purpose in life, for like why are you here on earth? And I think for at least for the entrepreneurs out there, like, that is their purpose.
To build stuff.
I mean, to create, like, I think if you're an artist, or if you're, like, that is, I mean, if not your main purpose, like, it's high on the list. And observing him over the years, I will say that no other CEO in corporate America that I can name has been under the same level of scrutiny as Mark Zuckerberg has. I would include Elon Musk on that list.
Wow.
Elon Musk only recently, because of his Twitter purchase, has inflamed every liberal in America, and now he's suddenly on their radar. But if you look over the last 10 to 20 years, like, Zuckerberg has been under greater scrutiny than, I would say, even Bill Gates. And so you can kind of imagine, like, puts him in a tough spot. Like, I don't think, like, he probably has to, or went through many nights of like no sleep because of, global negativity, not just on his business, but him personally. And it's pretty incredible how throughout all of that, like he's still surfing on his like his like foiling surfboard or whatever it's called, and
Yep. With his zinc sunscreen. Yeah.
he's still putting on his sunscreen and like building new things.
Mhm.
And I think the best thing that he's done recently for himself, for his mental self, is getting away from the politics of the world. So he hired Nick Clegg, who is the deputy PM of the United Kingdom, to be his like chief policy guy. So he becomes the lightning rod. Clegg becomes the lightning rod for all this like content moderation and these like some of the more like the sort of policy questions that people like to throw at Facebook, Section 230, et cetera. And what does Zuckerberg do well? Like he's a product guy. And so he's focused on that. And I will say that I don't know of another CEO, and maybe Elon is like close in this regard, who is as close to the product itself as Mark Zuckerberg. So if you listen to any corporate earnings, or in the case of big tech, if you listen to congressional hearings, and you listen to a Sundar Pichai, you listen to a Jack Dorsey, you listen to any of these folks, a Benioff even, right? Like they don't have, I think, the like that almost like innate oneness with the product that Zuckerberg has. And I think it's really unique that, again, unlike traditional CEOs, when there is something about the product that needs to be talked about, Zuckerberg is literally on Facebook, on Instagram, interviewing with like someone in your shoes, say a podcaster, and talking about all these things that they're building with a great degree of like passion, and I think kind of almost like this forward-looking, here's the world that I want to build. Here's what's going to happen in this new regime that we're trying to create. You don't see that with most CEOs, and I think that's a pretty unique trait that it doesn't show up in valuation so much, but just gives, I think, for long-term investors a sense of like conviction on the CEO's part, like, hey, this guy's in it to win it.
Yeah.
And he's going to do everything he can to get there.
Great. So I wanted to go back right after college. You worked in the trenches at Credit Suisse. I guess it was kind of like boot camp for a little while there. Was it hard? What was it like watching Facebook grow so quickly as you were kind of working this 9-to-5 job, or 9 to 9 in a lot of cases? What was that like for you?
It was more like 9 to 4 a.m.
Right.
I mean, it was kind of surreal. Like look, I was in a pretty stressful environment. So to be honest, like most of my mental bandwidth was just focused on my job, because it's just, if you've known any like M&A bankers, it's all consuming, and that's kind of all you do. Interestingly, after my banking experience, I worked at a hedge fund in Boston. And so it was really there that I developed a love for investing and like really honed kind of my investing chops, so to speak, and figured out like what the jargon was all about. And it was sort of a demystifying experience for me, because I was, put on a floor with a lot of very experienced investors, and it all started to click. So watching, and at that point, like, I think, I was gearing up for, a career in entrepreneurship. I ended up pursuing a JD MBA at Northwestern, and sort of, I think there was an educational sort of period where I think I had time to reflect on life a little bit, and to think about what I wanted to do. So I wasn't thinking so much about like, litigation or kind of what, Facebook growth. I was watching it, but I was pretty I'd sort of shifted gears a little bit, in terms of resetting my own like mind and just training myself to become, a better business person, better investor. And that was really that was the focus. It wasn't so much thinking
Yeah.
about, oh, I'm not a bitter guy. So I wasn't like, oh man,
Uh-huh.
this is growing like a weed. Like I should be there. That was not my mindset.
Yeah. Did that experience with Connect You and Facebook kind of stoke the fire in terms of your path towards entrepreneurship, or did you always know that that was your path?
No, I didn't know. I
Okay.
stumbled on it. And this goes back to college. I had no strong view on what career I wanted.
Hmm.
Um, like I knew that I wanted to do probably something in business, but I didn't even know what that meant. I had no accounting background. I was really pretty green. But when the whole like connect to you concept came to my head, that was really not only a light bulb from the standpoint of, oh, this could be a great business,
Hmm.
but it also convinced me that entrepreneurship was something that could be a career for me. And the reason was because I felt like I was more of a generalist rather than a specialist, meaning like I feel like I've been fortunate to be able to do a lot of things decently well, but I wouldn't consider myself an expert in any one thing.
Uh-huh.
And I think that is great if you want to run a company because you kind of have to do a lot of things well. And I think you've got to be a connector and sort of a team player. And, I think I always felt like I was good at that. I've always played sports and, you know, I tend to get along with folks. I'm not like an acrimonious person.
Yeah.
Um, and so I think my personality fit with at least my thought of like what entrepreneurship would involve. And, that hasn't really changed over the last 18 years. Like I still feel that way. And so for me, it sort of felt natural, but I only realized it once I had an idea I was passionate about.
Yeah. Yeah. That makes sense. I want to go back to your conversation with Mohnish Pabrai about Meta for a moment. Did anything in that conversation change the way you think about Meta as an investment? And I just want to throw out a quick soundbite, an incredible soundbite that Pabrai put out. He said, I think Elon Musk is more likely to get to Mars than Meta is to kind of build out the metaverse. And do you have any thoughts about what he said there?
Well, if you believe that implies that Monish thinks that the metaverse won't happen, I think that's just wrong.
Mhm.
I would say there's an enormous amount of institutional momentum towards a metaverse, and in fact, multiple metaverses or multiple virtual worlds that are interoperable.
Yeah.
It's although I think Meta is definitely the biggest proponent of it in terms of A, their brand, but B, the amount of capital they're putting behind it. If you look at companies like Qualcomm, NVIDIA, Roblox, Apple, Microsoft, they are all working to build individual pieces of a more digital world. Now, the other part of that statement that's important to dig into a little bit is what is the metaverse?
Yeah.
And if you're of the belief that a metaverse is like the Matrix, like a full-blown Matrix where we don't even know, like we're not even aware of the fact that we're plugged into some virtual reality. Well, that's probably further off and may never happen. And maybe that's where that Mars analogy or comparison may make some sense. But if you're of the mindset that a metaverse means a more digitally connected world where you can put on a personal device that will give you and feed you information in your field of view that is fully connected to the internet, that will happen because it is happening. You don't need to believe in magic for to buy into that idea. There's a related question of, well, how much of a economic value is there, or how much economic value can be ascribed to that? Like, is that a niche use case, or is that something that, going back to Facebook's DNA, is something that would appeal to 1 billion plus people? Now, I would argue it's the latter, and the reason is that this version of the metaverse solves real problems, right? And so simple example, I mean, Mark actually recently posted a picture of him with the CEO of Luxottica, where he's holding he's got a wristband on. And so Mark says something effective like that wristband is going to be connected to your glasses. Luxottica they own the Ray-Ban brand, which owns Wayfarers. And the next version of the smart Wayfarer, or what Facebook calls the Stories sunglass, will be AR enabled. And you can think of dozens of use cases for why that would be extremely valuable. A very simple one being when you're driving your car, to be able to get directions through your sunglasses just by talking. Like, hey, take me to the YWCA in Greenwich, Connecticut. And having a virtual assistant in your ear and a visual display in your eyes.
I want that now. I want that right now.
Exactly. Like it's the kind of thing that's almost so intuitive that you don't even have to question like the product market fit. Yeah. It's just, is the technology there? And I will tell you, it's probably closer than a lot of people realize. The next version of AR glasses, which Facebook's going to release this year, we're talking about September, October timeframe, like not that far away, has recently been described as a laptop replacement. And that's a bold claim. And I would assume the first version of, it's called Project Cambria. I'm assuming that version will have serious, like there will be some gaps, right? But if you think about it, there is kind of the hardware piece of it, and there's the software component. There's the software aspect of it. The software aspect of it has to be like a full-blown operating system, right? Because it has to hold and carry and execute applications that do different things. One of which could be maps, one of which could be search, one of which could be something that's more, photo or video related. One of them, there might be a gaming aspect to it. So all of this stuff is being developed, and this ecosystem is developing in the same manner that the Apple App Store has developed over many years. So I almost feel like you don't have to stretch that far to see that, wait, there are real use cases that are better solved through one of Meta's devices than through your cell phone. It's just a matter of form factor.
Yep.
And as a consumer, if you can come to terms with that, I think you can get excited about the so-called metaverse. And I think if you are, the fact that you can get all that for free today, because Facebook stock trades at some very, very low multiple, is pretty impressive. I mean, it's pretty awesome. I think it's very compelling. And that's exactly what Mohnish kind of came to the conclusion. He's not a growth guy. He's not one to like buy into promises. Mm-hmm. He wants to own something at 10 times earnings that has a lot of free options built into it.
Yeah.
So do a lot of investors. And as free options go, having a free option on one of the key players in the metaverse is a pretty big free option.
Yeah. Yeah. Good point. Last one on Facebook. So Guy Spear, there's a lot of people who point out some negative side effects of Facebook in terms of, the way it's impacting our youth. It's kind of addictive to scroll. People have self-image issues. And I was just listening to a podcast with John Huber, and he was asked this same question. And he basically said, well, if you're going to pick at all of the negatives of a company like Facebook, you have to look at the positives as well. You have to take the whole thing. And he pointed out communication is critically important when it comes to creating a free society. People need to be able to talk to each other. So I just wanted to get your take on this statement, Facebook as the new tobacco.
I think it's very much a function of like the current media zeitgeist, which is to turn everything to 11 and to frankly, like exactly what you're saying, like completely mischaracterize like what the holistic picture is. Mm-hmm. I can't tell you how many times, I'll read, let's say a news release or an earnings release, and then I'll turn on the news and the characterization of what I'm reading is like 180 degrees away from reality, and it's, so look, you're an investor, Guy Spire's an investor, I'm an investor, like we can reasonably disagree on things, but our job is to kind of cut through the noise, and to look at, this company as large as it is, with as diverse a set of use cases as exist on the platform, and to simply kind of categorize it as like the new tobacco. It's like, that's the reason why these opportunities exist in the markets, where you can buy these companies. And look, I mean, just on the tobacco point alone, like, it's completely disingenuous to say that, like, allowing people, giving people the opportunity to connect is a bad thing. Or, like when you think about the sort of creator economy that has sprouted as a result of platforms like Instagram, where people are making real money because of, or YouTube, for example. Like, it's crazy. Are we going to go back to the days where we're, watching like a CRT TV where there's 4 channels? Like, I think that the positives far outweigh the negatives. And I think it's incredible that now, you don't have to rely on CNBC or ABC or Fox. Like, there are so many people out there who have really interesting opinions about, what's going on in the world, and they're on social platforms. So yes, you're going to get people who might be off the rails, saying things that maybe they shouldn't, but you're also going to get a lot of people who are extremely informed, who you would never have heard of before. And I think that's pretty awesome.
Yep.
I think a lot of the negatives will get, like, some of the stuff will get regulated out. And there's an issue of, like, how do you police something that's so big? Like, there's some practical considerations there, but I think those will all get ironed out over time, or at least get closer to getting, to being better policed. But ultimately, like, I think having a more connected society is a good thing.
Yep. Agreed. So I want to spend a little time on SumZero, the company that you've built. It's an online network for professional investors to share ideas, right? You post an idea. By doing so, you get access to the research of your peers. So you've had, all of this time to observe some of these incredible investors in this network. How do you personally assess the investment skill of an investor? Obviously, you're looking at track record. You're looking at, how long have these investors been able to generate these returns? Is there anything else that you look for to assess the quality of an investor?
I just try to understand their process. And I think what's great about SumZero is that, the folks on SumZero who manage capital, they're sharing research on the platform. And so you can, when you read it, you get a sense of what their investing philosophy is. And then you can decide for yourself, like, does it align with your own investing philosophy? Is it compelling? Is it differentiated? Or rather, what differentiates it? And the returns are only just like one piece of that broader question. Like, it's obviously useful to know that somebody has outperformed the markets over the last 10 years, right? But more often than not, you may not have long-term data on someone's performance because they're relatively new, or maybe there's a couple of years of performance track record. But you really have to make kind of a decision around, like what is future performance going to be driven by? Is this person doing something that's unique? And then if it's a fundamentally driven strategy, I think a lot of it is sort of the personality of the person. Yeah. I know a lot of analysts who are, from a personality standpoint, not even keeled. And that shows in the way they churn their portfolio. Like, I think it's always most interesting to see what people do when they're losing money.
Right.
Not when they're making money. I mean, you can learn something from those scenarios as well. But I think when, when shit hits the fan, like, that is really the stress test that helps someone who's like considering allocating capital to understand like, well, how does that person really think? What is their investing philosophy? Well, let's find out. What I like about the value framework is that there's a degree of patience that it requires. And it forces you to have long-term views. Like you can't be a value investor unless you're one of these like ARB guys, right? That you're doing like, merger arbitrage where you've got, like the Twitter situation, you're betting on a deal closing, like, okay, fine. But if you're looking to buy compounders, which is kind of where that's my world, like I want to buy stuff that I can own for 10 years. You can't be day trading. Like it just, the two things don't work together. And yeah, just because rates are going up, you can't be like liquidating your portfolio. And unfortunately, that's what a lot of people are doing these days.
Right. I mean, Buffett can do it with Activision. We'll give him a pass with that, but probably not many investors can.
Well, he's not levered.
What's that?
He's not levered, so he doesn't have that. He doesn't have margin call risk.
Right.
But he also tends to buy stuff that's already to compress multiple. I mean, look what he did with Apple. Look what he did with Goldman. He's done it time and time again. But he waits. So like, it's a real luxury to be in a position where you have a solid cash buffer when the markets are down 40%.
Right.
But then when they are down 40%, you have to have done your homework on your favorite names to know that they're actually undervalued, not just value traps. And that's a really hard, it's a really hard to do that because people just do not have the time horizon or the, let's say, financial discipline to have that buffer in place so that they can pull the trigger when the time comes.
Yeah. Yep. That's absolutely right. I think it was Buffett who said, I'm a better investor because I'm a businessman, and a better businessman because I'm an investor. So I'm curious, how has building SumZero made you a better investor? Obviously, you have all this access to great investors, right? But the actual practice of building your business, how has that impacted your investing?
I think building a business helps insofar as it helps you understand the human component of a company or a stock. Like I think a lot of people think of stocks as these like chips on a table, but what they don't understand, a lot of people like don't realize that when they buy a share of a company, like they're actually buying a piece of a real thing, like which is a company that has employees, that has management and a board, and they're making capital allocations decisions every day.
Yeah, you're buying hours of people's lives, right? The employees, the management.
100%. You're like literally that's what you're doing, and I think if you're too removed from that, like you start to think of the stock market as this like as a game, but not, you don't really have that ownership mindset, which I think if you run a business, you have that mindset. And so the other thing about running a business that's helpful from the standpoint of investing is that you are more familiar with a broader array of products and services from the standpoint of a customer. So for example, SumZero as a business is a customer of Salesforce. Like we're a customer of FactSet, right? And so, and a long list of other services that we rely on to help our sales team, to help our engineers, to help our marketing. And so, when me as an individual, if I'm looking at, like, okay, where is Salesforce trading today? Because I'm a customer of theirs, like I have a better sense of, I think, their product than like maybe somebody who's never used Salesforce.
Right. You get an inside look at the ecosystem of a business, right?
100%.
Yeah.
And it's great because you're getting, a lot of interesting data points. There's feedback from your own employees. There's also your interactions with their account management teams. Like, what is their service like, right? And so when you deal with a lot of different companies, even within fintech, when you've dealt with Bloomberg, you've dealt with FactSet, you've dealt with, other data providers that provide various kinds of pricing data, whatever, like you can start to get a sense of like, okay, like who's really running a tight ship?
Yeah.
Who is, And you can use that as another channel check on where that thing should trade, and put the valuation in better context.
Yep, makes total sense. How do you differentiate SumZero from a service like Value Investors Club? It seems like there's a lot of commonalities, great investors kind of publicly sharing their investment write-ups. How do you differentiate between
Yeah,
that?
it's a great question. First of all, our platform is totally transparent. So any piece of research you see on the platform, if you're a buy side member, you will see the name of that analyst, and we vet out everybody who joins the network and contributes. So the research on SumZero has to be approved. Like, you can't just post research on the platform, and we vet out every single idea, and we really look for detail, thoroughness, rigor, detail on valuation, detail on catalyst, detail on risks, and we want to make sure that people aren't just putting like tweet-like memos, right? This isn't a 140 character like thesis. People are typically posting a 2,000 word report on a company they've done a lot of research on. Now, versus Value Investors Club, not only is there transparency around the author, which compels them to be more forthright because their reputations are on the line, there are far more incentives for those folks to contribute in the first place, because we have ancillary services in place that aren't offered elsewhere. So, for example, fundraising is an important ancillary service on SumZero. There are hundreds of family offices on SumZero that are looking to find emerging managers, and we help facilitate those connections. And the research serves as kind of one like icebreaker, in the sense that if let's say you're MIT, like your MIT's endowment, and you're looking to find new investor talent, you want to find a third-party manager that's really good. Well, again, being able to read their content in addition to seeing returns and knowing who their auditor is and all that stuff is really, really valuable. So that part of it, the fundraising part of it, is important. And then also from a career standpoint, we have an in-house recruiter who will help SumZero members find jobs at funds and leverage their research for the purposes of recruiting, which is another, I think, like really valuable service that we provide. And there have been a lot of folks who've found new positions at other funds or whatever because they've been able to leverage their track records on SumZero.
Yeah.
Speaking of track record, there's an entire section of SumZero just dedicated to rankings. That's like performance based, trying to really spotlight the folks who are the most consistent in terms of their performance.
Nice. Yeah, I hadn't thought about that before, that accountability on SumZero versus Value Investors Club. I think it's basically all anonymous when you go on Value Investors Club, right?
Yeah, it's anonymous, pseudonymous, but
Yeah.
you really don't know who's on the other side. And I think that leaves a lot of room for like horsing around. Whereas on our site, when you post, like, your reputation's on the line, which gives you a lot of, I think, good reason to put your best foot forward. And then if you post something that does well, or where you get positive feedback or high ratings, you're able to use that for career benefit, which I think is really great.
Yep. So Divya, I know we only have a few minutes left here, so this might be my last question. You mentioned in a recent interview that SumZero covers more than just public companies, right? There's bonds, cryptos, even private companies. So that got me curious in terms of your own investing. How does your portfolio break down between these different asset classes? And a follow-on question: how do you think about public versus private investments in the environment that we're in today?
So me personally, I run my own portfolio, if you will. It's split probably, I don't know, call it 60-40 between publicly traded securities of some kind, mostly equities, some crypto. And then the other 40% is just real estate that I personally. And I don't. Oh, and then of course I'm not including my business in this allocation, but that's another piece of it. I'm also so I have some private company exposure. Like I don't know if you would know this, but so I'm on the board of Gemini, which is a crypto exchange.
Oh, I didn't know that.
And so some exposure there.
Hmm.
And there've been a couple other sort of private companies where I've served in an advisory role where I've, as a result, gotten some exposure to privately held assets. But the majority of my private holdings are in real estate. And what I like about real estate, I think it's a good inflation hedge.
Hmm.
It's not as easily technologically disintermediated. So if Elon does go to Mars and that becomes like a new supply of real estate, and Manhattan is like, or like prime real estate in New York or Connecticut isn't interesting anymore, like I would take a hit. But until that happens, I think owning real estate as sort of a stabilizing force in your portfolio is a good thing. I mean, A, you can rent it, but B, it doesn't oscillate. It's not a roller coaster ride like the public markets are.
Hmm.
And then on the crypto front, for me, it is still a minority position. Let's call it it's a sub 5% kind of thing for me, and that varies a lot too. And maybe it's less now because crypto's crashed. But I think with crypto, the best way to kind of play it is like you index to something like an Ethereum, where you're not really betting on a specific use case.
Hmm.
You're kind of betting on the racetrack, like you're buying the racetrack, or you're buying the island of Manhattan and waiting for other people to build skyscrapers on it. Like I think Ethereum is the most interesting of all of them, because it has the biggest ecosystem.
Yeah.
And it's more recently grown a lot of institutional adoption, but from a pure engagement standpoint, which I think is what matters the most, kind of like any social network, it has far and away the most engagement. So Instagram just recently announced they're going to be allowing creators to display NFTs on Instagram. Those NFTs that they will support will be Ethereum and Polygon NFTs, whatever, and they're going to be supporting a couple other types of NFTs, but Ethereum is at the top of that list. All of the DeFi applications are obviously on Ethereum. The majority of them are, and that's not changing anytime soon. And all the stable coins, most of the biggest, if not all the biggest stable coins are Ethereum based or ERC20 tokens. And so I think for people who just want like index exposure and they're not like going to sit and read white papers all day and try to understand the team behind Solana or the team behind Polkadot, that like if you're not a VC, you should just own Ethereum. Bitcoin, I think if you're maybe, Bitcoin is a little more, I feel like, to me, harder to get your head around, only because it doesn't do anything.
Right.
It's something you can sit on and hold, but it's not the foundation for like a decentralized application economy in the way that Ethereum is.
Yeah.
And I've always in my head, I always see like Ethereum as being able to do everything Bitcoin does, but like all this other stuff too.
Yeah. The free options.
Yeah, exactly. And so I kind of like that ecosystem effect. The ecosystem in Bitcoin is probably more the folks who are macro oriented. Like if you're a gold bug, like I would agree. I think you should have some exposure to Bitcoin, because gold is kind of conceptually similar. Like you can use it for jewelry, but for the most part, people just store it and that's it.
Yeah.
They don't take it with them to work or what. It doesn't really solve any problems. It has some industrial use, and obviously it's a beautiful object, but it's not really used for much else. And Bitcoin does all those things better in some ways. Like it's not a shiny object, but it's obviously easier to transfer. It's cheaper to store. It's more divisible. And there's a lot of, if you think about like the Paul Tudor Joneses of the world or the Winklevoss twins, there are a lot of like whales in the crypto industry that have like an almost religious belief in it. So in a way, it's like, it's like, I don't know, it's almost like the Catholicism of, or the Christianity of crypto, right? It's the OG. And so if you're a believer in that, and don't feel the need for it to change, I think the hallmark of it is that it doesn't really change. They do have this new Lightning network, and we'll see how that pans out. But then maybe Bitcoin has some appeal for those folks. But I think as a technologist, if you're like kind of a growth minded, and again, you like to invest in things that are, going to create ecosystems, or I think that's where Ethereum is the most interesting. And I think Vitalik is a really unique, like, leadership figure, and probably the most credible of the lot. Like, he is the Bezos, or the Zuckerberg of the crypto revolution.
Whereas Satoshi has got that anonymity that you'd find on Value Investors Club or something like that.
Well, I think that the Satoshi element gets back to that religious vibe. It's like you almost just have to believe. But if you're a non-believer, like you're a pagan or whatever, then I think having, I feel like Ethereum having that, it's not just Vitalik, by the way, it's the whole Ethereum Foundation, right? It's all the key developers that are building it out. Having a lot of transparency into what those guys are doing, and how they're, like, the big catalyst right now is the merge to proof of stake, and knowing that they're real people that are actually focused on that. That there's a foundation, the Consensus Foundation. It's like Joe Lubin, he runs that, like, that's focused on helping individuals and corporations incorporate Ethereum into their own products, and their own product solutions, is, I think, comforting, because so much of crypto is like hot air, right? So you can kind of, I think, make a relative judgment that, okay, on the spectrum of hot air, like, this has the most, or like on the spectrum of like real versus total hype, Ethereum is closer to the real end of the spectrum. And I like that. I mean, I think if you're going to have crypto exposure, that's definitely one to take a hard look at.
Yep. Awesome. I know you got to run, Divya. Thanks so much for your time today. Where can people connect with you and find out more about SumZero, your awesome investing platform?
SumZero.com. There's a big join button. So I'd encourage any individual investors, really, like, we make the site available to anyone and everyone. We limit our contributors, but in terms of people who can read the research, and I think if you're value oriented and you care about understanding fundamentals, it's a treasure trove of content. So I would definitely encourage all your viewers to check it out.
Sounds good. Awesome. Thanks so much, Divya.
All righty. Thanks, Brad.
Okay. Yep. See ya.
Bye.